Hello, hello, hello. I have a confession. I love swag. Seriously, it's one of my favorite things. I am in Dubai now at Binance Blockchain Week, and as you can see, got some pretty cool swag today. This is from JP Thor from the Thor Chain team. Can't see a damn thing in them. They're freaking awesome. Anyways, today I'm joined by a very special guest, Jake Brukhman, founder and CEO of CoinFund. Jake's a really cool dude, a one of the OG crypto investors. He was one of the first crypto-centric VCs to be on the scene. CoinFund was started in 2015, launched their first fund in 2018, and you'll hear all about it in today's episode. Obviously, nothing in this episode is financial advice, but Jake does give some very cool alpha on his investment strategies and thoughts for the future. So definitely tune in and enjoy.
Welcome to Beyond the Code, the podcast where industry experts and brilliant legal minds discuss the impact of new emerging technologies. I'm your host, Yitzy Hammer, a lawyer and tech enthusiast. Join us as we explore the legal, regulatory, and ethical issues surrounding AI, blockchain, and more. Get ready to go beyond the code and stay ahead of the game.
Jake Brukhman, welcome to the Beyond the Code podcast. It's been a long time coming, but I'm happy that you're finally here. And I'm looking forward to our audience getting a chance to know you. We met like a year and a half ago in Miami. You were kind enough to join me on a panel at a crypto fundraising event that we did for Shalva. And I thank you for that. And we didn't get much of an opportunity then to talk about CoinFund and about your background and how you got to where you are today. So I think that'd be a great thing for us to kick off with. Why don't you tell us a little bit about yourself?
Awesome. Yeah. Thanks for having me, Yitzy. It's a pleasure to be here. Great to meet you. A little bit about myself. I am a technologist. I studied math and computer science in college and then in grad school. And I worked in basically like quantitative finance on Wall Street for a couple of years before going off into just sort of broader tech industry. I worked as a technical product manager and engineering lead at Amazon, where we were working on some ad tech stuff. And then I was a CTO of a kind of pre-IPO tech company research type of company. We were one of the first companies on Bloomberg to offer private technology research back in the early 2010s. And then I, along the way, found Bitcoin in 2011, got really interested in blockchains, and by 2015 was sort of running early CoinFund, and the rest is sort of history.
CoinFund's been around since 2015?
July 1st, 2015. And actually, Ethereum launched on July 30th, 2015. So we predated Ethereum mainnet.
It's funny, like I came into crypto 2016, but not like all in like I am today. It took me a little bit longer to ease in full on. And I'm reading Laura Shin's book now, The Cryptopians, and it kind of like goes way back to the roots of Ethereum. And it's interesting to just like see kind of like I guess as a fly on the wall as to like what was going on, at least in the Ethereum house at the time. Because I wasn't aware of like all the backstories and everything. So it must have been a cool time to be in crypto. So what did you do between like 2011 when you first came into crypto until you actually started CoinFund? And then tell me a little bit about CoinFund.
Definitely. So in 2011, I just had a friend who, showed me Bitcoin. He was a bit of a hacker, kind of interested in various kinds of esoteric topics and technology. I've told this story on podcasts before, but I called him up like years later in 2017, and I said, "Man, you must be a Bitcoin billionaire by now." And he was like, "What? Bitcoin? What happened with Bitcoin?" Like he showed me Bitcoin in 2011, and then sort of forgot about it.
I,
But he
I
got
was
back
hoping
into
that he
his
forgot about it and he forgot his Bitcoin in his wallet as well.
he got back into it around that time. But so I was sort of like aware of Bitcoin in 2011. I had tried to mine it on my laptop. I didn't fully like understand how it worked or what it did. It was just this like intriguing, like nebulous idea. And it wasn't until, I'd say like late 2013, I was working at Highbridge Capital, and one of the quants on the quant team, I'll never forget this, put together basically a one pager of how like Bitcoin blockchain consensus worked. And that was really the thing that like made me have a light bulb moment. And I was sort of plugged in ever since. So I bought my first Bitcoin on Coinbase on that upslope to 1200. I think it was November 2013. I think I paid about $400 for my first Bitcoin. And then, very soon it was at 1200, and I was like, whoa, this is a crazy asset class, something to pay attention to. And then of course it came back down just as quickly, if not quicker, back, in 2014. But I was plugged in, and from that moment, I was kind of trading. I was, my background is in, as I said, quantitative finance. So I was like running a few market making bots. In fact, I remember in February of 2014 when Coinbase Exchange launched for the first time, for like a hot second, I was the highest frequency trader on Coinbase, which didn't, of course, last very long, but um, enough for the company to notice what I was doing. And then as I was following along, I was really like asking the question, like, where is this all headed? Like, okay, Bitcoin was being presented as this digital currency thing. Obviously, nobody was really using it as digital currency. A lot of the VC-backed startups that got funded around Bitcoin in 2012, 2013 were actually like kind of going out of business already, because, nobody wanted to integrate Bitcoin as a currency anywhere. And I kind of it was really Vitalik, to be honest with you, who reframed my mind correctly around this topic. And I remember reading Vitalik's white paper. It was like late 2014, early 2015 at some point. Um, and then just kind of putting it down and looking at the wall for 30 minutes and being like, yeah, digital assets, like that makes a lot of sense. And I think from that point on, I was like, digital assets are going to be a new asset class, and I need to bet on that. And so CoinFund was formed from the
And just
idea
place me on
that,
your timeline. Where was that when you were at AWS? Like, where were you? What were you doing in your personal career at that time?
yeah, I was a CTO of this fintech research
Oh, okay,
firm.
that's what you were. Okay.
Yeah, in fact, the firm was like aware of crypto, like very early. To their credit, they even saw like Coinbase secondaries for, I think it was the series like B or C or something. It was like $500 million valuation for Coinbase. Seemed crazy at the time, of
Who
course,
knew?
right?
Yeah.
Um, but you know, it was from that moment of reading the white paper that I was like, okay, well, I can form, I'm a tech guy. I could start a startup now and try to like develop this technology. But I was always interested in like the intersection of finance and tech. Like I always worked in kind of, this type of field. My parents were engineers, worked on Wall Street for many years in trading and infrastructure. Um, and so and I was always interested in investing. And so like what came together for me was hey, like I should start an investment firm that really focuses on the space and makes a long-term bet that this technology is going to be revolutionary. And I could be next to 100 different CEOs building different innovations in the space and developing the industry and so on. And that seemed like a good idea at the time. I called up some lawyers. They said it's too expensive for you, kid. Like I had no idea how to run a fund or anything. So I, kind of formed CoinFund from the ground up, learned everything by doing it, and we very organically got a community around the project. I think CoinFund Slack launched in, I believe it was like April 2016. It was frankly
Wow.
like really countercultural to some of the people I was working with at the time, because they're like, what do you mean you're going to start a fund and then have an open chat where you discuss your investments with anybody who wants to come in from the internet? But I think what the CoinFund Slack did was it was the first place where people kind of took a scientific approach to blockchains, because everything that came before was like, we're just going to speculate. We're going to like, this is a lottery. Like we're going to bet on stuff. And my approach was like, well, let's just see like what's real and what's not, like, what is this technology
Because
good for?
you're a science geek. I mean, you're a quant. So, and
Exactly.
yeah, but it makes so much sense to look at it from that perspective.
Totally.
And
We
were there
started,
any other? Yeah.
I was going to say, we
No, just
started
were there any?
interviewing. Sorry, we have a little bit of a delay here. Let me just finish. So we started interviewing founders. Actually, if you dig around YouTube, you might still find those like old videos from like 2016, and started to take blockchain seriously. And there was like a moment where just about anybody who was anybody in that space was in that Slack channel. Like a lot of the early crypto fund managers. I won't name names and stuff. Like a lot of early founders. And so from there, CoinFund became more of a firm. Officially, we raised our first fund in 2018. We got backed by Venrock, which we could talk about. Now David Pacman from Venrock is our head of venture investments, and the rest is history. But yeah, back to you.
Yes, I'm curious. Were there any other crypto-centric VCs that were active in 2016? I mean, I know that your fund didn't officially launch until 2018, but like I don't remember there being anything that was crypto-centric. There might have been some traditional VCs that had maybe raised funds for, more emerging market style investments, including crypto, but I don't remember there being anything that was crypto-centric in the sense that, and I don't know if you guys do, but they take tokens as opposed to equity, and then they have more of a, let's say, fluid regulatory approach than like your traditional VC at the time.
Yeah, there were definitely like other players in the space. I mean, there were no like institutional players really. One exception might be like Pantera. To their credit, they had their first like Bitcoin fund. I think it was like 2013. They were really the first fund to convert institutional investors. And I think I'm not totally sure, but I think those early investors were really just kind of high net worth individuals in the network of the founders of Pantera. But to their credit, they were like very early. They were in market. Cyber Fund was a very crypto native fund that was just like, we're just going to focus on kind of the core thesis of decentralizing everything. They're still around today, and some of their founders have been like very successful with various projects. Metastable was around, I think, is more of a liquid fund, right? But it's all a matter of definition, right? Like I'm not sure that there were, I think what I'm trying to say is like CoinFund differentiated by being crypto native, but also trying to merge those ideas with professional investment management. We achieve that over time, right? But like, at some point we realized like we need to build an institutional grade firm here if we want to be around for a long time, and we're very long-term oriented at CoinFund, so that's what we did.
Okay. And what's your typical like investment approach? Do you guys, I mean, I know that you're New York based and you're probably, I don't know what your corporate structure is like, but I presume that it's, has a significant US presence. Do you typically invest through token investments, or are you only equity focused? Do they have to be set up in the United States? Do you invest in offshore companies? Like I guess I'm asking, what's your regulatory approach?
Yeah, I mean, it's a very broad question. So we have 3 programs at CoinFund: the seed program, the venture program, the liquid program. Seed typically looks at, pre-seed to A, but obviously focuses on seed. We'll write like $500K to $5 million kind of checks. We tend to lead rounds. The venture program is focused more on Series A and B, looking for companies with more kind of traction, more product market fit, revenue potentially, right? Like just a little bit more mature. But Series A and B in crypto is kind of like mid-stage almost compared to everything else.
Right.
And in that,
probably survives at least one cycle.
That's right. And in that fund, we'll write like $5 to $15 million checks. We tend to lead rounds. And then the liquid strategy is run by our head of liquid investments, Seth Gins. He's been on many podcasts. And that's more of like a discretionary kind of fundamental, strategy where, he's the portfolio manager, essentially making trading decisions. So not quant, in other words. And with those three programs, we have tried to cover the majority of everything in crypto, blockchain, and decentralization technology. We invest, essentially globally, although in practice, of course, we probably have more investments in the U.S. and Canada, in Europe, in Asia, etc. But we're
Hmm.
always watching kind of newer markets like LATAM and so forth. Um, and then in terms of like what we invest into, we're generalists. We tend to be thesis and trend driven. On the earlier stage side, and kind of in general, actually, most of our investments have been in infra. You know, there's more consumer plays coming onto the market now. We're starting to see more of that, and that's changing. But for the vast portion of our 10-year history, we've been looking at like blockchains and interoperability technology and scalability technology and zero knowledge proofs and homomorphic encryption and just like really deep tech AI, right? Deep tech kind of stuff. And now things are starting to change. Like we're seeing, one of our portfolio companies, Gunzilla, just launched Off the Grid, which is one of the first Web3 games. It's getting some attention, some
Yeah,
traction. Uh,
it's fun. I've never heard of them until today. This is the second time they're running it. They're doing an event here in Dubai tonight, and somebody told me to
oh, fantastic.
come to the Godzilla event. I'm like, I don't even know who these guys are. I had to Google them, but yeah, I guess that they're making some they're making marks. Okay,
Yeah, and
cool.
it's exciting to see because like the problem with sort of the digital or like the NFT space has been, is this stuff sustainable? Is it going to stick around, or is it all sort of speculation? And I think what games will show is that there are in fact like really important in-game primitives that gamers like will really enjoy and appreciate and use over time.
Sure. I thought back when, during the NFT craze that like play to earn was going to take off. Just unfortunately, like they weren't able to find like a sustainable business model that made it work from a tokenomics perspective. Um, Anybody who does manage to crack that nut, I think there's a ton of potential there.
Yeah, definitely.
Like the economic side of gaming.
I think one of the inherent properties of digital assets so far, and this might change in the future dramatically, but it's been a really volatile asset class. And play to earn is this sort of like simultaneously ingenious and very dangerous idea because it's ingenious in the sense that it like really um, lowers the barrier to entry for people to get into gaming and like really build essentially wealth by being inside of these games. I think all of the theory on play to earn is like very correct, but the practice of play to earn is that you're paying people in this like insanely volatile asset, and if you're not watching the economics of that, like you can destroy a
Yeah,
project.
it's not it's not sustainable economically, or hasn't yet. There hasn't yet been a model that's sustainable economically, but whoever cracks that, it's gonna be big. I wanted to ask you. I mean, obviously the answer is probably yes, but I'm just curious as to like how. I imagine that your science background adds a lot to your ability to, I guess, determine the right investment path to choose, especially in an industry that's, I guess, very emerging as far as the tech side is concerned. Like a lot of the things here haven't been done before. Um, so a lot of things are built off other things, but there's certainly a lot of innovation. I wonder like where your science background comes into play when you're wearing your VC hat.
So right, so as I said, I'm a technologist who became a VC, and I really did it through um, hands-on experience for over a decade, also working with incredible people like my partner Alex Felix and David Pacman, who's considered one of the top VCs in the world. Um, had like profound influences on me as an investor, obviously. Um, I think there's not enough like technical people in investing, and in crypto, there's also not enough
Hardly
like
any. Like it's
right.
very rare that you see somebody who's like exclusive or who's a geek through and through who's in the investment world. It
Well,
doesn't.
they're definitely like exceptions, right? So I'm, for example, like I really appreciate the work that Casey Caruso is doing. She used to work at Google and also was a VC at Bessemer. I really appreciate Logan at Frictionless Capital, where I'm an LP, um, where he is, he comes from a tech background. He used to work at Tesla, right? So there are definitely like people in the space who have the background to really understand the deep tech. And I think that's been one of CoinFund's edges in working with founders who are, predominantly, as I said, working on deep tech. On the other hand, a lot of the crypto investors have, like me, have come around very organically. And like a lot of folks out there, they don't come from traditional VC. They haven't honed their skills at a firm in San Francisco. And so as we go through the professionalization of the crypto fund space itself, I think the bar is going higher and higher and higher. And for example, like I mentioned, there's more consumer stuff now. Like I'm not a consumer VC almost at all, right? Like we have people at CoinFund who actually worked at Excel, like Einar Brothen, like David Pacman, like they've done like proper like consumer investing. They've done like SaaS. I'm much stronger in, in infrastructure, and some of that stuff is a little bit more kind of outside of my wheelhouse. But what's cool about CoinFund is we've brought a lot of multidisciplinary people together, both crypto native people and people with traditional experience, like Chris Perkins, who used to work at Citigroup running their derivatives business. And we're sort of melding those two sides together to create the best possible investments for our LPs.
Okay, so then talk to me a little bit about the best possible investments. Like, what are some of your key investments that you're bullish on, that you're comfortable talking about?
Well, I mean, there's a lot of them. We have over 110 investments now across the funds at CoinFund. But I'll say like the profile has been, we want to see a more traditional kind of life cycle in these projects. Meaning, when we invest in a project, we're not really doing that to maximize a token supply, FDV, and then flip it in a couple of years. We're really sort of insisting, like, if we actually all want blockchain technology to be truly adopted in the world, we need to be building products that people use, that are creating fundamental value, are disrupting, are innovating. And so when we set out to do a venture investment, we're really thinking on a 10-year time frame, just like a traditional VC. But also we're very eyes wide open that we are not in the traditional VC asset class. We're in the digital asset class. And that comes with certain features, certain advantages,
high
certain
volatility,
differences.
high liquidity.
Right. The middle 90% of our deals, look like something like an equity deal with a token component. And this token component is so important. Like, it is the thing that will differentiate traditional VC and crypto VC in a massive way. Like, people in traditional VC have not seen, like investors in that space have not seen DPI now for a very, very long time. The number of liquidity events, public companies is going down. And what crypto is bringing to the table here is that we can there's a new way of launching products and services. And there's also a new way of getting exposure to them through token economics. There's so much more liquid. And from a fund manager perspective, it is an opportunity not only to create fundamental value long-term, but to create DPI sooner. And it's like incredibly competitive. We think like crypto funds will outperform, and they actually have already in the past years, but in the future, they will outperform like most things that people can invest in.
Yeah. And if you're investing in companies that are actually building real infrastructure, right? If you're taking that 10-year approach, because unfortunately so many people in this industry take a very short-lived approach. They're looking to, they're looking at the tokens as a way of getting liquidity fast, right? They're not looking at a 10-year waterfall. They're looking at something that they could cash out on quickly, maybe before the the people who bought in the public sale realize that what they're investing in is a scam. I'm not saying that everything is like this. I'm just saying that the industry is fraught with, tech that's not super innovative, something that's kind of like what somebody else built, but a little bit different. Do a quick return on the token. But if you're investing in something And this is where I think your scientific background like really gives you added value to you as an investor that has like real infrastructure. Maybe won't give you like a quick flip on their token. Maybe their token, until it develops like real utility, it will take time for their product to develop. And if you have that long breath and that long term approach to things, then it will pan out for you twofold, both on the token end and on the equity side. More and more crypto investors say, like, I'm not interested in equity. I want something that I could turn quickly. But if you're holding a token and your company is building something real, then you don't have a piece of the IP. You don't have a piece of the long-term pie. All you have is the ability to have bought in early and sold early. So you're a trader ultimately. You're not an investor.
Right.
Not
Exactly.
you. I'm saying that.
This is no, of course. But this is such an important point, right? Because there's so many things to say here. First of all, like what happened in November 2022, FTX went down. And after we sort of sorted through the rubble of FTX, we realized, wait a minute, there was no oversight here. There was no board, there was no governance, and all these like major responsible firms, basically like didn't do the DD and didn't insist on governance.
They FOMO'd into it,
Right. So as a crypto VC, like the days that were, 2017, 2018, whatever, where people would just buy tokens through SAFTs, I think those days are over, because the reality is, sorry, you were shaking your head?
Yeah, they're not over. You've matured as a VC, and you're not seeing that crap, the low-hanging fruit, but it's still there,
right,
believe me.
Right. No, I'm not saying it's not there. I'm just saying that it's not a kind of like operable approach from a manager's perspective.
100%.
Because when you sign that SAFT, and then later, like something goes wrong with the team, which of course happens most of the time, like in VC and in crypto VC, like most projects eventually do go to zero in a couple of years, and you have just a kind of a handful that are long-term successful. But in that moment, when something goes wrong, you don't want the founder to turn around and be like, wait a minute, like you're not my investor, you're just my token holder. Like I don't actually owe you anything, and you're not like overseeing me, and there's no governance around what I'm doing. Like those days, from a manager's perspective, those days are over. I don't think a responsible manager can make deals that don't involve, I'm not saying a board seat, but like some kind of equity arrangement where rights are protected.
Of course. On the flip side, I'd say I don't think that a responsible entrepreneur who's looking to build something with a long-term approach it's hard to tell people not to take money, should want to onboard VCs that have that quick flip attitude. I think that it would be much more beneficiary for them to have somebody with, a rich experience like you guys have that could help them reach those long-term goals. It's not just money in the bank. And I assume that this is your investment approach as well, that you take that you do a little hand-holding and advisory and not just investment. Correct me if I'm wrong.
Well,
I can't tell by your facial expression.
I don't know if advisory is the right term, because that's a kind of a term of art. But we absolutely are hands-on VC who we have platform functions. We have a head of platform. We have a head of people. We have a head of comms and marketing. We have our deal teams and our managing partners who all collectively work with our portfolio companies. So
it's a package.
It absolutely is a package. When a company hires CoinFund to be their lead investor, they're essentially hiring a team of about 31 people to help them achieve long-term success and bring their expertise to the table. And that model has worked very successfully. Like the best advertising for a crypto fund is when your portfolio company, tells the next company, like, this is one of the most valuable or the most valuable investor on my cap table, and here's how they helped us, right? That's always like the best phone calls that I get.
Okay, I need to ask you something that's like a little bit of a touchy subject. If you don't want to answer, that's fine. We're a few days away from the elections in the States, and while there's a lot riding on these elections from many perspectives, crypto is definitely one of the, I'm not saying it's a determining factor for everybody, but people who are in the crypto industry are probably voting with a little bit with what the outcome of the election might have in store for the future of crypto in the United States. It is the SEC under Gary Gensler and under the Biden administration has been less than friendly to crypto firms, and I'm saying that very, very lightly. What are your thoughts from a crypto perspective?
Totally. So I think the good news that I have for everyone in crypto is, by and large, it doesn't matter who wins this election. And the reason I say this is because the most impactful things that are going to happen for crypto is sort of an overhaul of SEC policy of how they deal with the space. And we should have we have a bunch of really good indicators that both candidates would oversee such an overhaul. Number two, the other most impactful things is legislation. We're talking about stablecoin bill, market microstructure bill. And the good news is that those efforts are actually very bipartisan. It was Chuck Schumer who, on the Crypto for Harris call, for example, said we want to pass this stablecoin bill by the end of the year. So it's very clear that these processes are not driven by the president. They're the president, is the president going to veto this? And I don't think that either candidates as president would, right? It's a very bipartisan effort.
Well, why weren't those bills driven earlier? Why wait till the end of the term? Could have done it 2 years ago, 3 years ago.
Dude, well, don't get me started on kind of US's speed of innovation and whatever. But I think that's the good news. On the other hand, I think that Donald Trump in particular has had a lot of rhetoric about crypto, and I think he is sort of seen by the space as more bullish for crypto just in terms of sentiment. So I think if he wins, I think there will on sentiment there will be a kind of a faster turnaround for our markets. And I've actually also, and I have reasons to believe this, but I went on Twitter and I publicly said I actually think Donald Trump is going to win. Every piece of data that I have access to seems to point in that direction. So it's feeling really bullish.
Amen to that. Okay, cool. I wasn't expecting that answer. I wasn't expecting you to say, that you bet on Donald, because I could say who I would want to win, but I can't say with any kind of certainty whatsoever as to what I think the outcome will be. But given that you're a quant, I'm gonna attribute a lot more weight to whatever it is that you've determined than what.
I very well could be wrong, and I'll own it if I am. But that's just what I think will happen.
Okay, next question. We've talked a lot about you and your role as CEO and founder of CoinFund. Take off your CoinFund hat and throw it out for 1 second. What's your position on crypto in your personal capacity? Do you dabble in a little degenning, do a little trading on your own? What are your thoughts? Just on crypto in general, and where do you think is gonna? What do you think? What do you think from an innovative perspective? What do you think are going to be the most valuable products that are going to be built, and what do you think blockchain is going to look like in 3 to 5 years?
Yeah, great questions. Well, yeah, there's a few questions in there. Let me start with PA. So most people who are managers, I also have a PA, personal account. I tend to do just a little bit of angel investing on occasion. Usually we just do that through CoinFund, but there are times when investments are from personal or they're not appropriate for CoinFund, and so I have I do a little bit of angeling, and then mostly my exposure has been to liquid digital assets. For a long time, since 2011, right? I do not do a ton of active high frequency trading today. There was a time when I used to do that. There was a time when I used to actively trade to sort of have runway for myself. These days, I'm really focusing on CoinFund, on early stage venture, on finding the best companies, on creating the best returns for our LPs. And I'm going into this bull market, which I think is going to be the biggest crypto bull market we've ever seen.
Dude, all-time
I'm,
high for Bitcoin today. I mean, this is it's
that's right.
it's pretty amazing.
It's it's amazing, and the strategy that I'm going into this bull market with is a very pared down portfolio with something like 12 positions that are all like high conviction and highly concentrated. And that's how I think that's the right strategy for my PA like today.
Hmm.
Um, so that's I think the first part of your question, and then the second part of your question was more around
Around the future from a tech perspective, like where do you think
yeah.
blockchain innovation is going to go?
So the North Star for me as an investor and as a manager at CoinFund is how does this set of technologies and primitives get adopted in the world? Like the North Star is adoption. Adoption could look like bottom up consumer adoption. Adoption could look like top down, institutional or enterprise adoption. But the fact is that we haven't even scratched the surface of like finding the real demand side of what this could be. And we're heading in that direction. I would say that like for most of CoinFund's 10-year history, the space has made the case that adoption will happen bottom up. That like normal individual users will get wallets, will put Ether in them or whatever, or Solana, right? Will go use a bunch of dApps. I do not think that thesis is played out well. Like, let me give you an example of. Yeah, sorry. Go ahead.
No, I don't think it's played out at all. I think like a good test is you go to like global crypto events or even like local ones in the US. It's the same people every time. Like
Right.
if that global mass adoption was coming, we would see it.
Yeah.
Um,
I
just not
think
felt.
so. Yitzy, how many apps do you think hit the iOS App Store every month? New apps. What's
Probably
your intuition?
thousands.
Okay, yeah, it's about
Although
40,000.
although giving that I know what the process is like to onboard apps to the App Store. Maybe less than that. But yeah, 4,000.
So
Okay.
40,000, 40, and
40,000. Wow.
40,000. And if you look at Google Play Store, it's about 50,000. So we could round that up and say there's about 100,000 new like phone apps that hit people's phones every month globally. And out of that 100,000 apps, like a handful become growing, sustainable, successful long-term businesses. Okay. That's what it takes to build a little app and make it successful. How many apps in crypto hit the market every month? 10 apps, 20 apps, 50 apps?
And somewhere in the
Like,
tens.
yeah, it's not even like until we're at a place where we are doing tens of thousands of dApps, right? Then we're not going to see too much like dApp adoption. So that's like one view. Like this consumer thesis, like everybody sort of
I think there's
ideologically
like
wants it.
I I totally agree with you. I think that that's you've wrapped it up nicely. I'd say that number one, as far as like velocity of dApps is concerned, we need chains that are faster and cheaper to run on, and I think that that's happening. We're going there. Okay.
Well,
Um,
I would argue like most, if not all, of the technology is there. What's not there is a demand side, and what's not there is like a fully scaled sort of developer market. Like I remember when I got the iPhone back in 2008, and I remember that week very clearly when they were like, "By the way, we're now opening the platform. People will be able to create apps." I remember that because as an engineer, I was like, "Oh man, I'm gonna go like write down ideas of what apps I want to create." And immediately, Apple just had this huge market of developers that were so excited to come into that space and build iPhone apps. And of course, they populated the store very, very quickly. we're just kind of like the technology for that exists in crypto, but we're just kind of like not there yet.
I feel like
Um,
Ethereum has that a little bit. I think the problem is that you have like too many blockchains, too many tokens, like so many things could just be like a slight improvement on something else. But no, you need to have an entire blockchain with this slight improvement and an entire new token, an entirely new exchange. And like everybody's trying to like reinvent the wheel because they want to concentrate the liquidity by them. But like they're only making something, a tiny bit better. Okay. Like
yep.
Cosmos is like a shitty blockchain that's that much faster than like another shitty blockchain. Sorry, don't take offense if you're a Cosmos fan. But we need one chain to rule them all, where everybody's focusing on developing on that chain and making that chain better. And in addition to that, if you want to have real mass adoption, you need people not to know that they're dealing with blockchain technologies, because number one, blockchain has a bad rep. At least like outside of the crypto sphere, people tend to think that crypto and blockchain are fraught with scams, and certainly for new people coming in, they are, because there's this sort of rite of passage where you have to get screwed a few times until you actually understand how to use the technology. So number one, like from like a marketing perspective, people need to be engaging with blockchain without knowing that they're engaging with blockchain. And number two, like we need to eliminate some of those like hard steps on the onboarding process. And I think you could do that in a way that is like frictionless without people knowing what's actually happening, in the background.
So I think everything that you're saying, although I kind of disagree with your point about one blockchain to rule them all, which we can get into if you want. But
It's not going to happen, so it doesn't matter. But I just think that.
Well, I think you're saying a lot of the correct things. You're pointing out that like UX has been subpar. You're pointing out that like, one of the other problems is like everything is so decentralized. There's no one kind of running central marketing for crypto, and so the narrative like runs away with journalists and politicians. And but let me offer kind of a slightly different perspective, and it's just like totally social. It's about like blockchain and Web3 being sort of a socially acceptable and broadly accepted thing to do, right? Like if it was socially more acceptable to be an engineer who worked on, dApps, we'd see a lot more dApps. And where I've kind of, don't get me wrong, like we're still betting on bottom up consumer at adoption at CoinFund. Like we mentioned Godzilla, we're actively looking at the Ton ecosystem. Like Ton has 900 million MAUs. Like if Ton can't
also
do bottom up consumer
today.
right, exactly. Well, you might run into some of our CoinFund folks there, by the way. But like if Ton can't do it, like nobody can, right? And so, but I've come around to a little bit of a different view watching 2024 unfold. And what I've seen in 2024 is a lot of processes of institutional adoption, a lot of examples of that actually becoming much closer to the reality. We've seen Gary Gensler himself sign 2 crypto ETFs, into production. We've seen BlackRock do a securitized deal. We've seen Superstate launched.
But again, those are all examples of people engaging with crypto without engaging with crypto.
Exactly. But here's what I'm trying to say. I think we need more broad acceptance of blockchains like in the world. We need this to be more socially acceptable. Like if you call up Goldman, right, and you ask Goldman people, like, what are you doing in crypto? They'll say that they have a number of verticals where they're betting on the future of like digital assets. They'll say like exchange, tokenization, settlement, like blah, 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 blah. And then you'll say, well, what blockchain are you building that on? And they'll say, well, Canton. Right? And the reason that Goldman is building on a private blockchain, private enterprise blockchain, is just a regulatory reason. It's just like the New York Fed doesn't think it is socially acceptable for banks to be on a public blockchain.
I don't think it's only a socially acceptable thing. I think that
well, I'm being facetious.
Regulatory question here. No, you're
right. So the policy of the regulators has to change. And
absolutely,
like,
dude, you're talking to a regulatory consultant.
Absolutely,
you're preaching to the choir, man.
What I'm saying is like people on crypto Twitter do not appreciate the extent to which a letter from the New York Fed could open up massive demand for
That's all it
public
would take.
blockchains.
That's all it would
And
take.
and like if you actually talk to people who work in banks, like they'll all just tell you straight out, like they're like, everyone's making a blockchain, but banks are not going to go on each other's blockchains. It's just not how this is going to work. And so they actually want a public blockchain. Like a public blockchain is credibly neutral. And the thing that they want, the thing that's blocking them is like, just some regulatory overhead. It is. I've talked to one big institution.
Hence the elections. It's becoming
Exactly,
big.
exactly, exactly. So I talked to one big institution. I won't say the name, but you all know it. And they said, our internal consensus view at our bank is that in a couple of years, all banks will be on public blockchains. So this is like not
Wow.
talked about enough, right? Like this is like the banks think this. So what I'm trying to say is, in a world where blockchains have become much more accepted, even
Hmm.
if they're like permissioned at first at banks, if they're driving like real businesses, if the regulators are allowing them, it becomes a much better environment for consumer adoption. That's my sort of take. Because like what we have
Yeah.
achieved so far is that we've got a bunch of people and put them into crypto. But when you go into crypto, you're on this like island where you have all this great stuff, but it doesn't work with your bank. It doesn't work with Google. It doesn't work with your digital identity. Like you're just sort of like out at sea.
Yeah, and that's the first thing that anybody who's from outside of crypto tells me. Like, what can you do with it? But you described it exactly. You told it exactly the way it is. You're on like this island, and you're isolated from the rest of the financial system and the rest of society. um,
Right.
but as somebody who lives in crypto, like there's actually so many use cases, like actual use cases, not potential ones, and you know I find it fascinating. There's never a dull moment. Also,
I'll give you like one other example from real life that got me
go for it.
excited about this. I was, we were due diligencing a company that was working on B2B payments. And we
Hmm.
got a gentleman on the phone who would be a customer of this company. And he runs a kind of global firm whose job is to deliver, chemicals, energy, and metal to, developing nations. And then they get
Hmm.
paid. And that's their business, right? And, um, he was like, I realized at some point that if I have to deal with, the Bank of Zimbabwe as a counterparty or some other
Settle on chain.
unreliable, right? He's like, I literally will not be able to scale my business. Like I'm going to
Hmm.
stable coins because I will not be able to keep track of all the risks, all the payments, all the delays, etc., that come with this type of approach. And so, you know, that could be an absolutely huge market. And I think that's what's driving some of the excitement about payments these days.
Yeah, I agree with you. It's a definite use case, and I think we'll see it. Cool, man. I would ask you just to leave us with like a final note. A lot of people who listen are like early stage companies, probably looking for investments, maybe interested in having a conversation or something. What kind of message can you send out to them? And then to all the people who are not looking for investments, how could they follow you, learn a little bit more about what you guys do?
Absolutely. So first of all, follow me on Twitter. I'm at JBRUKH, JBruck. If you scroll a little bit back in my timeline, I can send you the tweet. You'd see. I actually have a tweet of like, this is what I'm looking for going into this next phase of the market. Um, and I'm still looking for a lot of infra. I'm looking for people solving hard problems in the intersection of AI and Web3. I'm looking for scalability things. I'm looking for payments things. I'm looking for NPC
Hmm.
things. So there's a bunch of like areas where if you're a founder and you are working in that area and you want CoinFund to take a look, we'd be more than happy to. My DMs are open. You can also find us at like events all over the world all the time. Please come and chat with us. Um, I would say I'm very bullish. I think we're going into like an amazing phase of the market now. I think we'll have an easier time in the US with our kind of regulatory situation. And I think it will become a much better jurisdiction shortly for doing crypto. So this is a really good time to lean in while the market is still kind of at the bottom here, and you can grow with it as it comes back. And then I'll say, if you want my like secret alpha, I guess, I say I'm very bullish on AI. There's a lot of noise in the space of decentralized AI, but
Sure.
someone on Twitter made a really good point. They said, crypto is going to be the primary way by which normal people could speculate on the future of AI. And that's something to think about, because there's a lot of very interesting deep tech going on in that space. Take a look at our portfolio companies in AI and what they're doing. I think by next summer, this is going to be, a huge narrative with a lot of breakthroughs. So stay tuned.
That's some good alpha. Thank you, Jake. This is great. I really, really appreciate it.
Thank you for listening to Beyond the Code. If you enjoyed this episode, make sure to subscribe, share with your friends, and to tune in again next week for more fun and insightful conversation.